Hey, Robin. Good morning, good afternoon, and good evening. It's Doc from North America, and it is TGIF. Too bad we don't have any music to kick on that. We should sing or something. All right. Let's see. What do we have going on this morning? There's the dollar index. Let me put the headphone set on. Let me take a sip of my tea to start the day off. All right. It's breakfast time in America. You can see on J4X 104.08 at 12. Kind of, I guess they're waiting for the news to come out. We have about an hour to that. And let me see, what else can we say? I see the euro is marching down a little bit there. You can see the dollar index. Let's see where the dollar index is. Let's put that up. You can see it on, what do we got here? Can we see it here? What's going on there? Why are we not seeing the whole picture? Oh, I think we have to move it over like that. There we are. That's what it is. We've been blowing it up and knocking it down and, trying to make them much more visible. So if we go like that, I think that's what we have to do. And you see right there, dollar index is moving up. It's still in the buy. Vacillating back and forth right underneath it. You can see the weekly very strong. It's your classic dollar index firmness. Rob and I were talking about it this morning. There's not much you can say more than just what can we say? The dollar index is fighting. It shows you the fight between money managers managing public money or just private money or anything, money managers, and the Federal Reserve. That's really what it comes down to. It's a battle, and it doesn't seem to be able to stop. It just continuously goes on. They keep on saying, hey, lower rates. We got very comfortable with 1.5% and 2% interest rates. Inflation's come down, don't worry. And then unfortunately, the Federal Reserve, matter of fact, I saw a really cute little story yesterday in the afternoon. It said, Yellen sees inflation now down to where she expects it to be at 2%, with the indicator that she likes to follow. That's what it said. And, I keep on hearing inflation's around the 4% area. By a lot of economists that follow it the old-fashioned way. And then you have the political way, and they're trying to convince us that inflation is basically back where it belongs. And why can't we get interest rates down there? And so they think that if they keep on repeating the same story over and over again, that people are going to believe it. But Mr. Powell is not interested in instigating inflation again. So, the best he'll do is wait till June. They want a March drop. They want them to drop the rates right now. And they're doing everything they can to try to convince everybody that inflation is not there anymore. But the problem is that when we walk into the stores, we put fuel in our machines, we go to, be it food or clothing or, any other items, the prices are higher this year than they were last year. And they don't understand that. And they go, wait a minute, why does the government keep on trying to tell us that it's over with and everything is good? When in fact, and Mr. Biden does the same thing. Our president, comes out and he says, I don't understand it. The economy is running great. Inflation is down. It's one of the best economies ever in the world. He just says all these things, and then people go and do something. They try to pay for their home. They try to rent a property, to live in instead of a cardboard box. They try to buy food. They try to buy clothing. They try to buy a car, and it's extremely expensive. And they go, I don't understand. He keeps on saying it is not expensive, but we can't do it. And so you have that same song going on with the Federal Reserve. They keep on saying, wait, we don't see it. Wait, we don't see it. And they keep on telling you But the president has told you, and the numbers have told you. Unemployment is, basically okay. Everything is okay. And then I think I published something yesterday. We talked about it yesterday, where I think I showed you where 85% of the states show employment up. In other words, unemployment is up, and we don't understand why every month employment is listed as down when the majority of the states, 85% of them, have unemployment going up, and even in the states where they're not going up, they're not going down. And so we're confused. Why do these numbers keep on reflecting that? So, and then let me just, nowadays we go into intraday trading. We're looking at intraday trading and daily trading and weekly trading. So here's to show you a picture of the euro this morning in an intraday trading situation. And there it is right there. And this is a 96 tick. And it went into the little cell there. Where did it go? Cell 4 over. So 1, 2, right there. It went into the cell. And it gave you a little rough ride there for a little bit, and then there we are now. We're, obviously it's making money. It's a winner chicken dinner, just like it was when it did this. Went into the buy right there, and climbed until I guess it kept on climbing. It refused to go into the sell because that was at the 0 line. See how the white plot line there in that box says plot 1 0 0 0 0 0 0 0. And you can see on the green plot 4 in that box, it says 0, 0, 0, 0. And even the fast algorithm on it goes 0, 0, 0, 0, 0. There's zeros everywhere. And so, it's still in that buy for that whole move right there. And so you can see they tried to lift it up. And then let's go look at the daily real quick. Yeah, let's do that. Let's do the daily. So it's Dookie Day right there. And that's the great experiment. Looks like they may have closed at an all-time closing price last night, but we'll go check that out a little later. We're picking on the plain euro at the moment. And euro went into the buy there yesterday. You can see that. Let's move this one over. There it is right there. And so it went into the buy yesterday. Well, it's a little weak today, nothing major. You can see it's very soft. But when you're going into intraday trading, not there. Like right there again. Let's see, Dookie Intra right there. You see there's a little pressure on it going down. And so we're trying to satisfy, the trader that has only a couple $100 in an account or a couple $100,000 in the account. Either way, we're giving you the tools in either direction to be able to trade the markets. That's what our algorithms do. That's what our mathematics does. And, it's what we do. And so you can see that there. And then we've set up, let's go back, let's see, let's make it like that again. You can see we have the same thing over here. We have a couple of tools over here with the Hinky-Ashky and the fast algorithm. And I'm sorry, this case here, it's the fast stochastic and then the slow stochastic. And we're working at getting these two put together like we have on our indicator here. We're going to call it the Doc's Manhattan indices or algorithms, and they should all be on one line, so you just see the regular bars, and then boom, you can read it and trade it. And you can always go in and do like you can see Dukascopy's J4X has the ability to go into seconds, ticks, minutes. You can do it all. There's a 3 ticker just for the fun of it. Let's see how it looks. And there it is right there. You can see how it's been climbing up. So we move it over right like that, and that's just a 3 tick. And then you can alter that. You can change it to like our numbers, like a 96 tick and so forth. And you can see when it goes into the buy, and these two this is higher than that. It's a buy, and when it's in a slow, it's a sell. And that's the way it goes. So we're trying to give you the tools of not only the daily, but we're trying to give you the week, the intraday itself. Let's go back to daily there. And there you go. All right. And so that's what you see there. It's the same situation. And we've worked to put this thing together over on the Dukascopy platform. It's not. It's about a 68 67, 69% accuracy rate to our math. So it's not beating our math, but it gets close to performing like our math, and that's the name of the game, really. I mean, that's how we try to trade around here, make it more efficient. We're always looking, if anybody has an indicator that they think is better in our math, we'll always put it up there and you can challenge it live. It's the way we roll around here. Alrighty, so from there, let's see, what do? We go to, let's go to the euro on here. Right there. There it is. As you can see, we widen it out. This is the daily. You see a little bumping going on. You see there. The slow was at, where was that at? It was at, I'm sorry, the fast was at 25.5, and the slow was at 18.4. So it's in the buy with the green yesterday. It's in a buy too. And that's what we try to do here. Try to give you a fighting chance to trade the markets. And we're going to look at the markets nowadays with the intraday, like you see right there, or the daily right there, or we even go into the weekly. Yeah, and we go over to, let's go see it again. I think where's that at? Get that mouse and we go like this. And right there. And you can see the euro still in that weekly sell. So the weekly trend overall is still down from this area here, and we're down in this area here, and there's a little dead cat bounce. That's what we see right there. It's nice to see that little daily kick in. But unfortunately, with the weekly in a sell like this, and so far underneath this manifold, which we call the nonlinear time manifold, we invented it ourselves. Basically it tells you that there's a lot of weakness going on in there. And we did this. We've made the fast algorithm a yellow line, like a warning, like a traffic light on the highway. And so it's been giving you warning signs from over here. And then the slow joined in over in here. That week right there, it joined in. We put the line in at the end of the week. And you can see it's been meandering down on the downside. All right. And traders, if you have any questions, fire them out. We'll look at anything, anyhow, anyway, in any product, be it Apple computer or Mr. Tesla's or Mr. What's his name, Elon Musk Tesla, or we'll go look at whatever you like to look at, or we'll look at gold or silver or crude oil or natural gas or you name it. We can look at, I'm taking a sip of my tea there. We can look at cocoa and cotton, you name it. We'll go after it. You want to see British pound? We'll show it to you. We can do it all. We can do it all. All right. Let's see. Where do we go from here? What do we say? What do we say? What to do? What to do? What to do? All right. Now from there, we slide over to the British pound. All right, and there's the British pound. Oh my goodness. All right, so there you can see it right there. British pound's a second day. Let's grab this green right there. Just move it over. It went into the buy right there. It's through the zero line. Unfortunately, the weekly is weak. It's below the zero line. It's even below the nonlinear manifold. It's below the manifold itself. Manifold tightens up, but usually you get some action when it gets tight and then starts to expand again. That's what's so nice about the manifold. It kind of gives you that heads up. So in other words, you see something like right here where the manifold was shrinking, and then when it starts to expand, notice that is like a top in the market right there, and it goes down. It does stuff like that. We'll show you. Oh, there's one. Well, that's not as good, but you can see here as this was expanding, and when it tops out right here, you see the change of direction. What I always like to do is I like to say that the manifold shows you the corners. In other words, when you're walking down a street and you get to a corner, in this case here, you can see the manifold was moving down and down. You can see a little flattening out here, and then it kept on going, and then it kind of started to move up. A couple of days of the manifold moving up, and the next thing you know, or in this case here, it's a couple of weeks, so the manifold was starting to move up, and then stops and starts to drop. You can see this thing creates a corner and starts to try to head down. I always like that. It's I like how the manifolds work, and then that's just the weekly. You see the same action. In this case here, manifold starts to move down. In this case here, the product found a way to go down. When the manifold started to turn up, it found a way to turn up, and it has that same characteristic. So there's a lot of nuances, I guess you could say, when you looking at our work. In this case here, look how tight it got right there, and then no more than a day or two later, you had a massive move out of it, and that's always. It's almost like it's telling you something is coming. It's like you can see how the manifold on a daily basis right there did the same thing, and then all of a sudden you had this massive push. And it is curious to see that happen. I find it fascinating. And then depending on where the white bars are, if the white bars are in the minus and it's breaking down, it has a tendency to go down. If the white bars are on the plus side and the manifold's lifting up, it has a tendency to rise. And there's all these wonderful nuances to our mathematics. So, and if you're wondering, who we are, let me see if I think I fixed it so you can actually see that. Let's see, who are we? Let's see. Good question. Who are we? That's not it, is it? No, it's not here. It's over here. Is it over here? That's what it is. It's over here. There we are. We go all the way down to the bottom. There we are. And now we go back to the platform again. There it is right there. And then we can show you, who are we? We are... Who are we? There we are. There we are. We're Chicago Quant Technologies. That's who we are. And we've been doing the webinars here for, I don't know, over a decade now. And, that's who we are, and that's what we do. We are market technicians, market traders, markets. Robin and I have over 100 years of experience. And so we're old men. We're like Biden. We're old men. All right. That's who we are. Now, where did I put our trading platform? Oh, I must have ran over it. Let's go backwards again. Well, there we go. Okay, that's good enough. All right, so from there, we're looking at the euro. Let's drift over to the cable on J4X. And there it is right there. You can see for 3 days now it's been trying to do its little perking up. You see the fast stochastic is at 49.74 right there. And the slow's at 37.7. So it's showing strength with the green Hinkiashki bars. And that is the match of it all at this point. Let's see. And when you see it on the other, you see it on the platform there. You see, we feel like it's been trapped in some type of, let's see, get that mouse. Where's that mouse go? Right there. You see it's kind of trapped. They don't really, at first it started looking like a head and shoulders situation, but it's really trapped. In other words, it's consolidating, waiting for the big interest rate cut. Everybody wants the big interest rate cut. They need those interest rate cuts. They want that interest rate cut. They have to have that interest rate cut. Doesn't matter if inflation wants to come back. They want that. They want cheap money. And right now they're not getting cheap money. They've borrowed money at 2%, and now they have to re-borrow it again at 3, 4, or 5%. And they're not happy about that. It gets expensive when you have hundreds of millions of dollars borrowed and even billions of dollars at 1 and 2%, and now you have to pay 2 times or 3 times more at 4 or 5%. And so the money managers keep on telling Mr. Powell he's confused. It's not Joe Biden that's confused and has lost his memory. It's Mr. Powell. That's what they keep on trying to tell him. And he's terrified to become listed as Arthur Burns, one of our Fed chairmen back in the 50s and the 60s, mainly the 60s, of actually raising rates and then tightening them, like that, and then turning around and loosening them up, and then inflation took off, and the White House had buttons. They used to put these little buttons on their shirts that said "Win, whip inflation now." He doesn't want to be known. He's already made the mistake once, where he missed the 9% move, and he kept on telling everybody it's transitory. Don't think about it. And he waited 15 months before he even raised an interest rate. And interest at that point, inflation was in the 6s and the 7s, and he was still lending money out at 1.25. So he was very upset about that, and he doesn't want that to happen again. And so that's why we're trapped with this. As Robin and I were talking about it this morning, they just won't let it go. They just keep on telling Mr. Powell, the Fed chairman here, he's crazy. You're crazy. There's no inflation. The economy is looking great. Unemployment is down at the bottom of the barrel. It's so low. Why do you keep on making me borrow money at 4.5%? Bring it back down to 1.5%. And that's exactly the war that's going on around here. Truly entertaining. Unfortunately, it's very strange. All right, from there we go over to J4X again. Let's go find the next victim. And there is, what we should do is we should show you an intraday cable. Let's do that. Just to blend into the whole party here. Let's see what we'll do. We'll go make a copy like so, and then go paste it like so. And you can see there it's still sliding. Oh, looks like it's trying to turn around. So it's been in the cell since the third one. 1, 2, 3. It's been in the cell since right here. And now it looks like it's trying to put a bottom end in here. Look at that. If this closes there in another 7 ticks, it goes into a intraday buy. 4 ticks. 2 ticks. And let's see how it looks. There it is. Back in the saddle again. And then let's see. We'll put that in right there. Let's put the cable in there and show you what the cable looks like. There you are. Look at that. So it did the same thing. Went into the little cell there, glided down, and it's still in the cell. It don't care. It don't care. It's like a honey badger. It don't care. That's pretty cool. So we're going to be doing this now. We're going to be looking at intradays. We're going to be looking at, dailies. We're going to be looking at weeks. This way, if you have $200 or $200 or $200,000 in your trading account, we'll give you a fighting chance either way. Either way. All right. So that's the cable. What should we go to next? We'll go over to J4X. Oh, we should take a look at the daily. Let's give you that fighting chance. And let's take a look at the weekly and the daily, since now you see what the intraday is doing. It's all the same math and same as accurate. It tried to perk its head up right here, but notice it didn't go into the buy. And it gave you a second leg down. It does that a lot. It's those ABCs that good old R.N. Elliott and W.D. Gann both talked about. All right, now let's go over to the daily and the weekly. And there it is. And you can see there that weekly sell still. You see it jumped into that buy yesterday. And so it's basically saying no, don't be long. Because we got the weekly sell and the daily buy, it's telling you to be neutral. All right, let's go to the next fun product to watch, and that's the dollar Swiss pair. You see it's on the daily on J4X. It's been marching up. See the two algorithms, or in this case here, the two stochastics. The fast stochastic taking out the slow stochastic. Not by much, though. It's towards the top end of its range at 93.2 on the fast. And the slow stochastic is at 89.2. There you go. Let's see now. Let's take a look at, let's see what the intraday of that looks like. There it is right there. See what the Swiss looks like in the tick. Tickety, 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 tickety. Tickety, tickety, tickety. There it is. So it went into the buy right here. Let's see, what's that? One. I like these lines here. You can always follow. So you go like 1, 2, 3, 4. Went into the buy right there. So we go 1, 2, 3, 4. Is that right? 1, 2, 3, 4. 1, 2, 3, 4. Yeah. So on this close right here, right there, it went into the buy, lifted up a little bit, instant gratification, backed off, and then ripped it. And now we're still in the buy, and we're trying to get we're 74 ticks away for going into the sell right there. Let's widen that out a little bit more for you to see better, like so, like that. All right, and let's put it up over here on Chicago Quant Technologies, right there. And there is the Swiss, and you can see the Swiss. We don't need to give you a history lesson. Just went into the daily buy there. At the same time, it's in a weekly buy, so it was a safe long play. And sure enough, it went higher than where it went into the buy. And it found a way to go higher and higher, and that's cool. We like that. And that's the name of the game there. I think I'm going to have a sip of tea. Put the little lid back on. Okay, traders. Nobody has a question anywhere still. Okay. That's all right. We'll just keep on marching. Just keep showing you our wares, how good we are. We're the best of the best. And so we try to, just give you the evidence every day live. Let's see. Let's go to the next pairs trade. And let's take a look at that on J4X. And that is, let's see, it's Mr. and Mrs. Yen. Now, the the Asian markets are pretty quiet at the moment. I understand Hong Kong was open for half a day. That was about it. It's the Lunar New Year, and so they're doing all kinds of, party. Cool. Let's put it up there. The dollar yen, which is basically closed, right there, and you see it's it was marching up like so. Let's put the fast and the slow there. You can see the fast is up at 88.7, the slow's at 82.3. They are, it's a very big economy, and so they're trading the product. It's almost at 150 now too. So let's get it up. Let's get it up on the screen over here, over there. Yep, look at that. And you can see that's moving up to the top end of that Fibonacci range. It's in the daily buy for a second day. It's in the weekly buy now for a fifth week. It went into the weekly buy there. On the slow algorithm, that's the green line and the white Hinky-Ashke bar. Not white Hinky-Ashke. It's our algorithm bar. And then we have the fast algorithm right there, getting into a buy about a week and a half, 2 weeks back, even faster. Back in this area here towards this low, and then you can see we're in a weekly buy, we're in a daily buy. It's trying to push up, and it's near a 45-year high. And so then, let's see, what do? We go like this. We go in and we go, let's change this to the yen. Format instrument. And we go click, click, click. And we go yen, yen, yen. And let's see how she looks. What are they doing today, even with a slow market? Okay. So we went into the daily, intraday buy. Did the same thing. It gave you a chance. And went into the intraday buy right there. Basically barely made any do, re, mi. But stayed in the buy all the way up to right there. So went into the buy here at the 149.45. Traded as high as the 149. What's the high there? 149.53.7. And now it went into the sell right here at 149.49.2. We're at 48.2 at the moment, and it's traded even lower, and it's trying to lift its head up again. And so that's the action we're seeing with the yen. And remember, again, it's the Lunar New Year, so the yen is kind of, it's a very big economy. So, their currency floats. And so, you can trust it a lot because it's real supply and demand. Not a fixed. I saw this morning that the Chinese fixed their currency this morning at 7.12 or something like that. They fix it. It's not a free floating currency. So they tell you what they're going to give you for it each day. They have a fix every morning. And right now they have it locked against the dollar. Wherever the dollar goes, it goes. So, okay. So from there, we'll go back to JForks again. And now we go look at the great experiment. And there it is right there. That is the Euro Turkish Lira pairs trade. We like to refer to that as the great experiment because the European Union is the second largest economy in the world. And Turkey is a bordering nation and at times has flirted with the idea of joining the European Union. And just as they got up to the point where they could join the European Union, then they chose not to join the European Union. And after a while, since their application was dropped by them, then after a while the European Union dropped pushing for that. And then we saw their currency go from 1 to 33. Now let's put that up on the screen and get a flavor of that action today. And we'll widen it out more and so forth. And you can see right there, the all-time close was 6. Is that it? No, that's the yen. Let's put it up there. There it is right there. So the all-time close of the Turkish lira against the euro was right there. That's the all-time close of 33, basically 33, 34.888 is that, or 86? Either way, we'll just say let's round it out to 33.35. And yesterday we see a close of 33.0643. Still below, and then today we're at, again, still at that 33.06. So it still has some work to do to get through another all-time close. And that's the great experiment, because you have one of the better economies in the world and the second biggest economy in the world trading with that country, which is a bordering nation. So you would assume, there's easier access comparing it to the dollar, because there's a whole ocean in between. So you're not going to get as much trade from the United States to Europe, to Turkey, as you would the European Union to Turkey. So we follow that, and it's a way more accurate way of looking at the currency. And so in this case here, the currency's gone from 1 and change over the last 10 years to 33 and change, and that is I guess we refer to that as hyperinflation. Like a hypersonic thing going on. It's taken off and doesn't let go. And so Giannis was saying that Giannis is head of analysis at Ducascapi, and he says that when you go into, he lives in Europe, and when you go into the markets over there in Turkey, like the food markets and so forth, they have signs up that say willing to negotiate price. That's what they say. So it's fluctuating that much during a day that if you wanted to buy an orange, or you wanted to buy an apple, or you wanted to buy a box of cereal, they'll basically negotiate with you over the price of it at the counter where you pay for it. So that's why we call it the Great Experiment. The currency has gone. They have this new economic plan under their former prime minister, now president, that has taken the currency from 1 to 33. And I guess you could say they devalued their currency to generate interest in investing in the country. That's the great experiment of it all. So when I say it's the great experiment, it is. It's a great experiment. They're trying to figure out how to grow their economy. And so their direction has been to devalue their currency. And so we call that the great experiment, trying to understand exactly what they're doing. I don't find it to be that comfortable, but that is what it is. So we call it the great experiment because we don't see too many currencies making moves like that every 5 years or 3 years. I mean, when you go and look at, say, the Polish, the zloty against the euro, I mean, it's trapped between like 4 point something and 4 point something, for the same time period of the last 10 years. And you look at the Israeli shekel, it's trapped between 4 point something and 4 point something for like the last 10 years. But when you go and look at the Turkish lira against the euro, it's gone from 1 to 33. That's not the same. Definitely not the same. It's not like trapped between 1.1 and 1.9 or 1.0 against 2.0. It's gone from 1.0 to 33.0. That's a yowzer. That's a wild ride. That's like, it's like a Saturday night at the rodeo, trying to ride that bull. That's exactly it. All right, so that is it when it comes to the currencies. If anybody would like to see a currency, we can always put it up there. We try to give you the major currencies. And so, like the euro is the second most active currency in the world. The yen is the third most active currency in the world. The British pound is the fourth most active currency in the world. The Canadian dollar is the fifth most active currency in the world. The Swiss franc is the sixth most active currency in the world, and the kroner is like the seventh most active currency in the world. And I think the Chinese yuan is in the top 10. It trades like 2.5%, 3.5% in the world every day, but it's a fixed currency. It doesn't float, so it's really hard to really garner anything more than this is what you will convert money to, but it doesn't reflect economic prowess. It's fixed to the dollar, so it doesn't. It's not. It's when you're looking at currency pairs, you're looking at interest rates and growth and the lack of growth, or that type of thing. And so when you're looking at these pairs, you're getting a fundamental understanding of their economies. Unfortunately, when you have a fixed currency, it's very hard to appreciate what is really going on economically. So that's why we do those currencies, and we don't unless you ask for the others. Now, I would assume that I think the Australian dollar is very close. It probably beats the it's in the top 10 also. It probably beats the Chinese yuan, and in volume every day, or at least keeps with it, that type of thing. And so that is really the dance that we follow around here. We try to stay with the most liquid products and the ones that you can learn from, and then the ones that you can't, we can only reflect where they are. We don't have much of a choice there. They do what they'll do, and we do what we do. So, And that is it with the currencies, unless someone would like to see something. Let's go over to the metals complex. And when we go to the metals complex, what we do is we go to one of the other top currencies in the world, and that is in the top 10, and that is the South African Rand. And the Rand is the number one brick in the world, brick currency. And so we always end by looking at the brick, the number one brick, because there's a lot of talk about the bricks. There's a lot of interest in trying to divert away from the dollar or some of the other currencies and move towards the brick. They have a lot of natural resources and so forth, and so they do have there's obviously an interest in them. I think we should have a brick. I was talking to Giannis about it. We should have a brick index. When they were talking about creating the Mexican peso, that was opening the doorway for a real brick currency. That would have been really nice, because Mexico at one point, which would have been the number one brick in the world, and then the South African Rand would have been number two, and we were looking at emulating. I think we had a way of looking at. I even put statistics and percentages, which ones should be number one, number two, all the way to, in other words, compete with the dollar index, the brick index. Would have been interesting, but unfortunately they don't have enough liquidity. Without the Mexican peso and the South African Rand, the rest of the index is almost non-existent. So at least it would have given us a flavor of the BRICS and what's going on as they grow, but Mexico walked away from it. Now Mexico is the number one trading partner with the United States, so it even beats out China at times, volume-wise. So it is definitely a legitimate brick, whereas because it has a floating currency, and boy, is it a good currency. It's a strong currency. Bounces between let's see if we still have it up there. We always looked at it, and then from here we'll go into the metals complex. Where is it at? There it is, the Mexican peso. And you can see there it's very strong. Hangs out in the 17s. It goes to 17.2. If we tighten this thing up, you can see, at best it'll go up into the 18s and then back down into the 17s. It's as much as it looks volatile, it's not volatile. Over the last couple of years, it has gotten up into the 19s and as low as the 16.8. Wouldn't Turkey love to know that their currency bounced between, say, 16.8 and 19 instead of 1 to 33? Yeah, I'm sure of it. It's a very stable currency. And we see the same thing with the Zloty, too. Here's the Zloty right there. And the Zloty is the same way. It's a very solid currency. It bounces in the fours. You can see there, even when it gets wild and woolly, it's going from 4.2 or 4.3 to 4.4, 4.5. It's not 45. It's 4 point, And so, it's even with the invasion of Central Europe, that battle that's going on there, the currency itself is a neighboring country, and it's bouncing around the 4.8s down to the 4.3s, over the same time period, that's 4.3 and 4.8, not 48 and 43. So that's an impressive currency. Same thing with, I think we had the Israeli currency on there at one time, showing you the same thing. Even in the worst of conflicts, they are much more stable because of their economic policies, I guess. I'm only guessing. Maybe I'm wrong. Maybe it's not their economic policies. I don't know. That's why we call Turkey the Great Experiment. And South African Rand, same situation. Used to be a stronger currency, but it has gold. They have a product. I know that the ANC is not exactly the best governing country, government in the world, but they do have gold. And since they have gold, we do see some strange actions go on, but overall, with the South African Rand moving up like that, you see that right there, and we put it up over here, that usually says that gold is going to go down in value. Because when it's rising, it's losing against the dollar. And when it's going down, it's gaining against the dollar. That's how the South African Rand goes. So let's put it up on J4X here. There it is right there. And you can see overall, let's put this full screen up. You can see the overall trend of the last 2 months has been on an upwardly slope. You can see that. And you can see from here it's ran up and then fell a little bit, and gold rallied and vice versa. And so if we take a look at it right now, let's go to gold and see what Mr. and Mrs. Gold are doing. There it is right there. And gold itself is lifting today, it looks like. And South African Rand, did that nice drop there, but the last 3 days now it's been lifting up again. Let's see. And they usually adjust. So if South African Rand is rising, more than likely they will put pressure on gold at the end of the day. Okay, there it is. You can see gold today is moving down a little bit more. It's in a daily sell from over here, following the way it's widened this out over on the J4X, so you can get a better flavor of it. So you see right there, gold is trying to move down. You can see that. You see we're in that weekly sell from here, in this area here, starting that week. And you can see over here, same situation, South African Rand trying to move up and gold trying to move down. It's a quiet Friday. And then from there we'll go to Silverado. Do 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 do. Do, 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 do. You see that? Now silver climbed into the daily buy yesterday. And the weekly, look at that. The fast is trying to turn up. But unfortunately it's still in that weekly sell from here. And we see how silver acts. Silver does its own little walkabout. It's like Crocodile Dundee. Just goes walkabout every so often away from the gold. And right now obviously, we have gold in the, where is gold? Gold is like in the 2000, where is that? Well, silver is trading at $22.63 an ounce at the exchange, and gold is trading at $2,040. So the gold silver ratio is definitely getting beat up, because you're only talking about, you're under 5% away from all-time highs in gold, and we're at something like 55%. Not even, it's even worse. It's like 61%. Off from its all-time highs compared to 5%. 61%. Oof, 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 oof. That hurts. That hurts. That definitely hurts. All right, and then from there, we where do we march? We march over to copper, the gold of China, and you can see that that stimulus that's supposed to happen is not happening at the moment. And there it is right there. Having its problems, that's for sure. It can't get any legs on it. They can't get it to go. And, it doesn't seem to stop. There we go. Now, from there, we go to the last of the metals, and that is platinum right there. Also pushing towards the bottom and been in that weekly sell since the 940s area, 935, something like that. We've noticed that, and we've been saying that. I'll tell you, with gold in the $2,000 area, it makes it very hard to want to play the short side of platinum. As long as gold stays up in there, sooner or later, the platinum will probably come back someday. Maybe after once they get rid of quantitative easing, that we'll probably see metals markets work much better again, and they've probably paid the penalty out of all of it. I mean, what do you call it? The metals market, for all the odd calamity that's been going on the financial markets across the planet, you would assume gold would have been much higher, but it's not, and you would assume silver would be way, way more higher. And it's way, way not. That's for sure. All right. Let's do this. Let's do gold. Let's go see gold on an intraday basis. Let's do that. And there's the gold right there. And it went into the little cell right there. And we're still in the cell. And you can see, it's trying to lift up a little bit. And it went into the cell right there too, right there. 1, 2. Let's see. 1, 2, 3, 4. 1, 2, 3, 4, 5. see where we're at. Went into the sell right there. So it's 1, 2, 3, 4, 5 from this line. So 1, 2, 3, 4, 5. Went into the sell right there in the over the 48 area, and has traded down to basically all the way. I guess that's the buy. Is that a buy right there? That's the buy. It told you to cover here. It lifted up for a couple bars and back into the sell again right there. So it's been two nice trades right there alone, and you can go dig out more trades, using the J4X combination that we show you, our Doc Manhattan indicator, and that algorithm, and that's always a good little game to trade for you with the low incomes or the low capital. You can do the intraday trades here and there and nip at it a little here, a little there. Practice, tune in. Don't just go trade instantly. Watch it for a month, trade paper first, get to know it, and then go from there. Alrighty. So from there, what do we do? So from there, that's the metals. Let's take a look at, let's go the reverse way. Let's go take a look at the next part of it all, and that is Brent. Go to the energy sector. There's Brent right there. You see Brent has been lifting up. Hasn't gone out and taken this high out yet, but it is lifting, and that's pretty cool. Let's show you where we are with the Brent. If we can find the right mouse. There it is right there. And we'll put it up on the screen. It's on our beta platform that we're working on, where one day you'll be able to use our mathematics. Right there. You can see it's in a buy for the last couple days. It's been in a weekly buy for 2 weeks, and it's lifting up just like it is right here. And then we go and we look at the crude West Texas Intermediate right there, and it was up higher, and now it's kind of starting to bounce off of it a little bit, but still high for the day. At one point this morning it was at like a couple week high. It was pretty cool. Let's put it up over there. There's on J4X at 76.02. And that's where it's offered, and you can see here. And then we go, let's see, let's put it up on the other platform like so. Where did that go? Where'd you go? Right there. Let's put it in there. And so we will go to, let's see, let's put it in there. Like that, and we go Charlie Larry. Let's try it again. Charlie Larry. And there it is. We're going to put it into the intraday. Let's see. We're in February. So February's gone. We're in March now. There we are. And let's put up the... let's go put it up on Chicago Quant. Right there. Right there. And right there. And you can see, let's go like that. You see it right there. Just backing off from its highs today. It is flirting with the weekly buy. Just like the others are already in a weekly buy. Our beta says we are in a weekly buy for 3 weeks? 4 weeks? Oh, yeah. Let's just show you that. A beta didn't go in and out like our platform has. That's why we're kind of confident in our beta platform. It's been in a weekly buy all the way through there. So all the way from back in here, it's been in a weekly buy, and it's gone from what's that, the mid-high 60s all the way up to almost $76 right there. $77? Something like that. What is that? Let's go put the mouse on that thing. Right there. And then let's go take a look at the intraday. There's the intraday. It's trying to pop up. I went into the buy on this one right here, 4 back, and it's up a little bit. And let's show you since we're at the end here, so let's show you where the S&P 500 is. There's the S&P 500, still making new all-time highs. There's a little pressure on it, and we'll see how that goes. But overall, it has that look like they like it. They like it. So, anyway, traders, everybody have a safe and smart weekend. We will catch you on Monday. talking about intradays and weeklies and dailies and talking about it all, because that's what we do nowadays here. We do it all. So this is Doc from North America saying, happy trails to you until we meet again. Happy trails to you, to all our trading friends. Later, later, traders.